Hello, Katherine. Thank you so much for being here with us today. We really appreciate your time.
Thanks so much for having me. It's great to be here.
And so, as a senior policy analyst at the Tax Foundation, what does that actually mean and what do you do?
That
Right?
is a really good question. And I think to answer that question, it might help to explain just a little bit more about what the Tax Foundation does. And then I'll talk a little bit about my role here. But the Tax Foundation is a nonprofit, nonpartisan 501c3 tax policy research organization. And we've actually been around for over 85 years now. And we work to advance sound tax policy at the state, federal, and international levels. And so our primary goal is really to conduct tax policy research to help inform policy deliberations at all levels of government. So we regularly testify before state tax committees when they're deciding tax policy issues. We also write a lot of blog posts and white papers to help advance the discussion. And we spend a lot of time talking to media just to help inform the debate since tax policy is really confusing. So we like to try to help cut through some of that confusion and simplify it as much as possible. And so I've been with the Tax Foundation for 5 years now, and I basically handle a subset of the states. And so just try to inform the debate however we can, again, with legislative testimony or by research and writing. We have a lot of annual products at the Tax Foundation that readers might be familiar with, or listeners, the State Business Tax Climate Index and Facts and Figures. And then we also are just constantly publishing things on our website as well.
Like, what are champagne taxes in your state, Tate? We love those at the new year. Love that. And beer taxes. I'm not a beer fan, but champagne I like. Yeah, I love that. So fun. It's such a relative perspective. You've only been there 5 years, so it's interesting because no one listened to you in Nevada when they enacted the commerce tax, because you said the Tax Foundation said not a good tax policy, but they did it anyway.
Yeah, unfortunately, sometimes
But we
states
try.
do what they want, but we do the best we can to push things in a
Yeah.
good direction.
We appreciate you. Honestly, you've been a godsend for me. When I left the trappings of the big four public accounting firms of the nation, I relied heavily on Tax Foundation information and comparisons and contrasts. When I was at a regional firm and I didn't have a Washington National Tax and the broad base of support, and it really has made a huge difference for me. So thank you so much for taking the time to speak with us today.
Well, thanks. I'm really glad to hear that. We love hearing those stories.
And I support you. I donate.
Oh, we appreciate that too.
So prior to joining the Tax Foundation, you worked for a couple members of Congress. And there's a couple specific questions we're going to ask you about that related to the TCJA. But how did you pivot from working in Congress to the Tax Foundation? Like, what was that transition like?
Yeah, that's a really good question. And I actually love telling this story because I spent the first 4 years out of college working in Congress. That was a really fun way to start my career. And I'm really grateful for the time I had there. But basically, during the TCJA debate, I was kind of a lower level policy staffer for a member of Congress. And I handled more than just tax issues. So I handled a wide variety of issues. And the TCJA was really a lot of members of Congress' first big exposure to all the ins and outs of the tax code. Because if you think about it, it had been 31 years since there had been a major overhaul of the tax code with Reagan tax reforms of 1986. And little things that happened here and there, but nothing major. So for me and for a lot of other staffers and even members of Congress, this was their first time really digging in at a super deep, granular level. And so we all had a lot to learn, especially if you aren't on the Ways and Means Committee. If you're on Ways and Means or Senate Finance, you know what you're talking about and you have a really good sense of what's going on tax policy. But for rank and file members or newer members, this was a big undertaking to get up to speed on everything and have to answer to constituents about these issues. And so at that time, I remember just having a lot of questions as different topics of debate came up. And every time I Googled a question, almost inevitably, the first answer that would pop up would be from the Tax Foundation. And normally they had blogged on that very question that very day. And so I just realized how timely they were and how good Tax Foundation has been at really simplifying tax policy and bringing it down to a level that anyone can understand. And so I really, just during that time, loved tax policy and really just got very interested in taxes specifically. So kind of ended up doing some informational interviews here and ended up on the state tax policy team, which has been a lot of fun and quite an adventure. Switching from the public sector to now a think tank has been great, but also switching from federal to state has been kind of interesting because so much happens every single year at the state level. Right. So there's so many ways you can help move the needle in the right direction. And, instead of being a very small small part of a big wheel, you're able to be one of a few players that's really having an impact. And that's been highly rewarding. So that's kind of a bit
funny. I think the same thing. I remember I started as federal doing tax compliance, even though I'm a CPA and an attorney. And I remember thinking there's a revenue ruling or a rev proc out there. Like that answer has been found. But with state tax, you could be a little creative because the rules haven't always been written to apply to the business at hand. So you can advocate for good tax policy, work individually, collectively. Really enjoy that too. It's funny. I think Mayor has that same view. A lot of us in the team at Tax Ops really feel that way about SALT and maybe started in federal and pivoted to state and local. That's very interesting. You share that same view.
That's fascinating. I love that.
Yeah, I'm the anomaly. I started just in state and local tax based on opportunity. And then it just was really interesting, right?
Because you switched.
I could have. But I was, one of the first things that I did, and I mentioned it before on the podcast, is I did a 50-state analysis of the taxability of downloaded movies. And so this is 2004, 2005, where it's like downloaded movies were a very new concept, right? And so here we are still kind of monkeying around with however many years later, almost 20 years later, the differences, but they still have a direct impact. Yeah. So,
and thank God for downloaded movies during COVID. I don't know what I would have done without freaking Wi-Fi and the internet. I don't know if we would have survived and had some entertainment and happiness and laughed, because we got our minds off the catastrophe all around. And you're like in the heart of it in DC. Are you in DC?
I'm in DC. Yeah.
Okay. So a lot of humans live there, a lot of policy happening there. Yeah. That's that would have been probably very stressful for us. And we live in Denver. So, but our team is spread throughout the US. So we all had a very different view of our experience with COVID. It's very interesting.
So are there kind of anything, stories, horror stories, victory stories that you can share with us as you were kind of getting your feet wet with TCJA, and share some of those with us who weren't on the ground and as CPAs just kind of have to live through the aftermath of what that means?
Yeah, I think I can. So I was just a lower level policy staffer. So I was like in my early 20s. So I was not making decisions behind closed doors. I was not drafting this legislation. And there were certainly higher level staffers doing all of that.
But you still probably ate plenty of pizza and worked late nights as a result of that.
There were lots of late nights. I just remember, sitting at my desk and the phone would be ringing off the hook. So every single staffer in those back offices was answering the phones, and there was a lot of confusion. I think a lot of panic about what is happening on taxes. And so it was really critical to try to cut through some of that complexity and really communicate with constituents, put some people at ease. From my perspective, really thought tax reform was a great idea and thought this would be something that was necessary and would help taxpayers in the country, brings a little more of a pro-growth angle to the tax code and make the tax code, I guess, a little less or help the tax code get out of the way of success a little bit more. And so, trying to tell that story was definitely complex because of the way our political system is. There's a lot of strong feelings on all sides of a lot of different issues, but I remember a lot of late nights, and but ultimately it was really rewarding to be a part of that and just to learn more about taxes and to really enjoy learning about taxes too, because you're always learning, and you probably feel the same way. But in the tax space, even if you've been in it for years or decades, you never are going to know everything. There's always more to learn and keep up with.
Well, for sure. And especially with that pivot, going and kind of being a part of the TCJA, which, like you said, was a kind of federal concept enacted by Congress, shifting to the tax foundation and specializing, for lack of a better term, in a few of the states and doing policy research on that. What are some of the things that you've seen over your last 5 years, policy-wise, trends, because here we really like to talk through trends and just kind of how some of the economic impacts trends. Right now we're seeing a huge uptick in audits just for our clients. So from a trending policy perspective, what have you seen?
Yeah, well, it's been a really wild 5 years or so in tax policy because, things had been fairly quiet until the TCJA. And then after that was enacted, you had state conformity, where all of these states are trying to figure out how the federal tax reforms would impact them and their taxpayers, because some of the base broadening, came through to state tax codes where they conform to some of the federal tax base. And so that would have resulted in tax increases in a lot of states. And so we saw a lot of states adjusting their tax codes to, bring rates down in response to that, or to just decide what provisions they wanted to conform to and which they wanted to decouple from. So that was kind of the immediate impact there. And then we also then had the 2018 Wayfair decision that really has fundamentally changed the sales tax landscape. And we're still adjusting to that, where states have kind of preliminarily decided how they want remote sellers and marketplace facilitators to collect and when they want to collect. But now that kind of is spinning a bit out of control with a lot of different, states wanting to latch on and say, well, you can collect these fees as well, or these excise taxes, not just the sales tax. And there's been a lot of complexity. And so I think there's a lot of work to still be done there. We've had, of course, the pandemic and all of the state responses to that. Everything that's happened at the federal level since then with federal aid. And then now coming out of the pandemic, we've seen states have a lot more revenue on hand than they initially expected. So, I think we all in the early days of 2020 were pretty panicked for many reasons, but there was this sense that this was going to be really devastating to state coffers, to local governments, that businesses would really have a hard time. And so certainly there were plenty of businesses that did have a very hard time, but the federal government came in with a ton of additional aid. And then we ended up seeing revenue levels actually stay pretty strong, which was surprising to most people, where a lot of sales tax collections dropped a little bit for a few months, but then really everything ticked back up pretty quickly. And states remained on an upward growth trajectory. And then that continued in 2021 and 2022. And now this year, where we're seeing high levels of growth, states are bringing in a ton of revenue still. They're way above inflation adjusted pre-pandemic levels. And so a lot of states are looking for ways to now adjust to the new normal with the rise of remote work. They're looking for ways to attract businesses and taxpayers who can maybe keep their city-based job but live where there's a lower cost of living. And so a lot of states have now had to adjust to that, and there's really this uptick in competitiveness, where I can talk about this more later if you want, but just there's been so many states enacting income tax reforms and relief, and just there's been a big emphasis on how states can make their tax codes more competitive.
Don't you think we're going to get rid of all the income taxes and just go to transaction level taxes?
I think that would be very difficult. But
well, financially, I think it would. But I think what I think is so interesting, we were just getting to know each other before the call. I was like, Texas, everyone's like, oh, there's no individual income tax. Have you looked at the property taxes in Texas? They're super high. They're way
Right.
higher than what we pay here in Colorado. So people don't look at the whole pie when they look at the pieces. They think they look at the political issue. That's why I think it's so interesting with sales taxes. No one really knows all the things that are taxed. They don't realize the impact. It's like 30 cents here, whatever. It's very incremental unless you're buying like a stove or, a car. Then taxes are huge amounts of your purchase price. But I think people don't realize when exemptions are added and how the finagling goes. But everybody gets the income tax rate.
That's a really good point. Yeah, we're especially with income taxes, but even with property taxes too, we consistently hear a lot of complaints about property taxes. And I know legislators hear a ton of complaints on property taxes, but there's some pros and cons to that, where really the property tax is a good, stable, transparent, and can be a pretty neutral source of revenue. But because you are paying in a lump sum and you're seeing your bill all at once, it can be really shocking to people. And you really do have to plan for it, plan for that liability, and plan that it might grow if your property valuations rise and things like that. But, we're all also paying, or most of us, depends on what state you live in, income taxes and sales taxes. And a lot of people remember exactly what they paid in property taxes in a certain year, but don't add up all their receipts or have a strong sense of how much they're paying in sales taxes. It's a little bit here and a little bit there, but over time, that adds up quite a bit. And with income taxes, there's so much complexity to the income tax system where you get exemptions here and deductions there, and then, clawbacks here. So it's hard to know and be able to predict from year to year what your income tax liability might be. And even something as simple as, marginal, graduated rate structures, there's a lot of confusion where a lot of people think they're paying just what one single rate,
34% on all of my income versus the forget that the first 10% isn't taxed, and they're not 10%, like 10,000 isn't taxed. And then it's the next tranche is at 5% or whatever it is. Right.
Exactly. Yeah, so people don't often know what their effective rate is, and
then you take into account like deductions and all that. Yeah, it's really difficult, and Judy, like you said, that it's the perception, right? Like Denver, we had a really large, in the metro surrounding areas, had a really large increase where my property assessed value went up almost, I think, 85% on my home. And I challenged it, and I lost. So I got denied. And I think what's difficult about that is, the assessment period is 3 years ago, where if you told me that, there's no way on planet Earth that I could sell my house today for the value that Denver thinks it is. And I generally tend to be kind of pro-tax. I appreciate that, taxes provide opportunities for a lot of people. I like parks. I like roads that don't break my car. So, and, my husband is in public education, so I appreciate schools, but some of that is just like, well, there's kind of just the public facing piece that becomes the challenge of what that means. And also, doing the math that changes my mortgage for literally, $150 a month, which is unexpected. So it's just, it's really difficult. And as someone who lives, works, and breathes in taxes, there's a lot of, just challenges and stigmas and whatnot that, that have to be overcome. And so I think it's nice that obviously you have, the Tax Foundation and people such as yourselves working with, the governments to kind of understand that, but also put out, context for the people should they try to search for it and put it in ways that you can understand, because it is very difficult.
Yeah, exactly. It's really rewarding to help, cut through a lot of that complexity and try to make it easier for folks to understand how their tax systems work and, get some sense of what's really going on.
But didn't you think it was interesting in the Tax Act that we actually wrote that you could no longer deduct expenses for entertainment, like golf clubs and theater? And I'm like, why would we get rid of that? I thought that was very travel, non-travel, but, business expenses for the things that a lot of people expend. And then the whole, limitation on state taxes is really insulting to New York and some of the very high tax states, where at least you got a little benefit for such a high taxing environment at the federal level. And now that's gone. 10,000 is nothing.
Yeah, that was
the spectrum of a high net worth individual.
That was actually one of the biggest, I think, stressors as part of the TCJA debate, at least from the inside. And there was a lot of pressure, about how capping the SALT deduction would impact certain taxpayers in various states. And, it is a little nice to be able to approach that debate now from kind of a think tank perspective, where you can be a little more objective and you're not subject to the political pressures. But yeah, the political realities are very real. And so that's something we at the Tax Foundation have the privilege of being able to say, in an ideal world, if you want to really have an ideal tax system where you can create a lot of economic growth and have simplicity, you should do things this way. But it gets messy because politics is politics. And so you have to work within that system and do the best you can. But we like to talk to lawmakers about how ideally tax codes should look like they were designed on purpose. But a lot of times, people are coming in and out of the legislature. New governors have vastly different agendas. And so the tax code can really turn into, a bit of a mess over time. And so periodically,
I'm surprised we don't have a supremacy cause claim coming after that for violating that clause of the Constitution, because by limiting the state tax deduction and some of the things that go from states that conform, don't conform, follow, the federal IRC at a certain level, you're basically overriding their supremacy by taking away some of the benefits that they have. It's taking away a tax benefit that was expected. So I'm surprised we haven't really seen any. I don't know. I'm not a constitutional law scholar, so I don't know, but it just seems like that was the foundation of our nation. I've really come to understand that as a state tax practitioner for 28 years. Like, it was all based on us making our own decisions based on our population in each state. We did not want a king, right? And so this federal government overriding state decision-making, that's kingdom, right? And so I'm surprised that some of that hasn't had more pushback.
Well, I would say, I think some of that, though, is the states enacting like the PTET to the extent that they could, right? Corporations can still deduct their taxes. That's not capped. And then the PTET, like, who would have thought that, states were going to kind of create this plan or this, idea such that if you are a member of a pass-through, you can elect to kind of pay your shareholders' taxes, take that deduction at the business level, and then that kind of, by a matter of flowing through activity, kind of get some of that deduction. So I don't know. I think that's kind of an interesting, creative way that states are, kind of deal with or kind of worked around some of that. And a whole new tax structure, tax idea came as a result of that, which probably never would have happened. I think that's interesting.